Hello, everybody, and welcome back to FX Street. My name is Akash, and today we're going to be taking a look at Bitcoin and discuss what's happening with it on a lower time frame, take a look at the high time frame, and yeah. So before we get into Bitcoin, make sure to head on over to our YouTube channel and hit the subscribe button. And if you want to stay updated to the hottest trends in the crypto market, make sure to also click on this bell icon. You can give us a follow on Twitter at FXSCrypto, and if you enjoy the content that I put out, make sure to give me a follow as well. And be sure to join this Telegram group that I do where I post exclusive trades that I'm taking. Kind of like paid group, but without the paying part. So yeah, let's start with Bitcoin. Right, so it's really interesting. If you are in the group, you already know what my game plan is. But let me just explain. I am looking to short Bitcoin at these levels here. The red arrow mark that you see here is basically short signals. There's this H4 supply zone here, or 4-hour supply zone extending from 20.7K to 21.2K roughly. And that's where I will be shorting this. So why am I shorting this? And what's the theory behind it? It's basically a range deviation plus market structure break setup where kind of, hold up, I'll just show you. Yep, this is the syntax, if you will, like the generalized structure of the price action. The price usually forms a swing low, forms a swing high, and then it rallies above the swing high, giving the illusion that the price is going to continue going higher, but then the price goes back down below. Now, this is an indication that the market makers collected liquidity resting above this previous high formed here. And then the price goes lower, which makes people believe that the price is going to head lower, and then they short, which leaves a lot of liquidity resting above the previous swing low here. And as the price goes up, collects liquidity once again, retest the supply zone that is formed as the price retraces from this third step, and basically gets rejected by the supply zone here and drops down. So basically, there's a range low that is formed, and then there's a swing low that is formed, and then a swing high is formed, and then a break of the swing high to produce a higher high, but then a retracement down to produce a lower low between the swing lows of 2 and 3. So basically, that's how the price structure is. So now let's take a look at that on the Bitcoin chart. Right, we have a range low that forms, and then there's a range high, and there's a deviation above the range high, which produces a market structure break. And then there's another deviation below the swing low formed between steps 2 and 3. Now that the price is deviated below this, you wait for the price to head back into the supply zone and then get rejected there, and that's where you short. Now, I already took this initial short, and I closed my position somewhere around here. But there is another opportunity for the price to go up into the supply zone and get rejected. Right, but what's really bothering me is the premature rejection at the Monday's high at roughly 20.3K. Now this, I don't see the price going much lower, but I feel like there is a chance the price could bounce off of this intermediate resistance level. Now this would be pretty good. Like, it would indicate that the price is trying to go up for another leg and retest this H4 supply zone. Now, in this case, we could probably get a sweep of this range high at 20.9K. But either way, I think opening a short position around here is basically my game plan. And so yeah, once we get a rejection here, I would love to short this coin here and then book profits around the liquidity objective, which is 18.6K. And if possible, we could also sweep the range low formed here on 18th of June at roughly 17.5K. So that is basically the whole game plan. But the way things could kind of change a little bit, but still remain bearish, would be to break this H4 supply zone, move above it, and then retest the 21.7K. Now this would produce a textbook triple tap setup. Now, a triple tap setup usually consists of a range high that is formed and the range high deviation, followed by a third retest of the range high. I've also explained this here in my another engine coin setup that I showed here, with the range low, there's a deviation below the range low, and then a range low retest again, which is then followed by a massive move up. Now, this is exactly the same setup that you see here, but in inverted form. So if Bitcoin price goes up and retest this, there's a good chance there's a rejection here, and then the price comes down, collects the liquidity resting here at 17.5K. So basically, that is my take on Bitcoin from a short-term perspective. It's going to stay between this range here, extending from 17.5K to 22.8K. Once we get a breakdown of either of these levels here, things could turn pretty volatile. Now let's take a look at it from a higher time frame. The void, for those of you that have been watching my videos on FX Street for quite some time, you know that the void has been a pretty important place where Bitcoin could bottom. It extends from roughly 30K to 12K. Now, back when Bitcoin price was crashing somewhere in in the first week of June, I mentioned that it could bottom temporarily between in this particular rectangle here, extending from 18K to 22K. So far, that's pretty much it. That's happened. Like the price is consolidating between these levels here. So what we have to the upside is this 200-week moving average at 22.5K, and then we have another resistance level here at 23.4K. So basically, what I'm saying is the upside is capped at 23.4K. But the most important level that you have to keep in mind is this 19,065 level here, because once we get a breakdown of this level, all hell breaks loose for Bitcoin and the price could come crashing down to 15.5K, perhaps even 13.5K, right? But eventually the void has to get filled. And I feel like the best way Bitcoin price could do that is by retesting the 11.9K level here. So yeah, basically keep a close eye on 19,000 level. Once we get a breakdown of 19K on a weekly time frame, that's where you basically short all the altcoins. So yep, that's pretty much it. If you enjoyed this analysis of Bitcoin, please make sure to like, comment, and subscribe.